There's a secret reason as to why Rivian stock might just be the perfect EV stock for you to buy. So keep on watching for the next 10 minutes as we give you a complete analysis of how the stock will likely perform going into 2024. But before we do that, subscribe to our channel $1 World for regular stock market videos. In the dazzling landscape of Wall Street, Rivian Automotive burst onto the scene like a shooting star, debuting amidst a golden era. It was a time of renewed hope, with the lingering shadows of the COVID-19 pandemic beginning to fade away. The financial realms were teeming with optimism, a cornucopia of venture capital and a red-hot initial public offering IPO market. Seizing the opportune moment, Rivian made its grand entrance on November 10th, 2021. As the curtains lifted on Rivian's IPO, the stage was set for a spectacular performance. The stock skyrocketed to a breathtaking intraday high of $179.47 per share on November 16, 2021. It was a crescendo that harmonized perfectly with the broader market, as the S&P 500 reached its zenith in the early days of January 2022. However, the symphony of success for Rivian proved ephemeral. Fast forward to the present moment and the stock stands humbled, down nearly 90% from its lofty all-time peak. At first glance, the narrative appears to be one of disappointment, a stock chart painting a tale of woe. Yet, peeling back the layers reveals a crucial lesson: the importance of divorcing a company's fortunes from the whims of its stock price. Rivian's journey, obscured by the fleeting frenzy of meme stock mania, is in fact a tale of resilience and promise. Beyond the market gyrations lies a company that is thriving, its success rooted in more than just the fluctuations of its stock value. As the calendar turns to December, Rivian emerges as a growth stock with a story worth telling and a narrative worth investing in. In the grand theater of Wall Street, Rivian, the automotive maverick, made its debut on the stock market stage at what seemed like the perfect moment. The air was charged with optimism, the remnants of the COVID-19 pandemic fading into the background. The coffers of venture capital overflowed, and the IPO market was a beacon of promise. Rivian seized its moment, unveiling its initial public offering on November 10, 2021, a spectacle that saw its stock soaring to a staggering $179.47 per share by November 16. Yet, as the curtain fell on the euphoria of its IPO, 2022 proved to be a tumultuous chapter for Rivian as a company. The treacherous terrain of supply chain bottlenecks and the relentless grip of inflationary pressures cast shadows on its growth trajectory, driving up costs and presenting a formidable challenge. The company found itself hurtling through cash reserves at an alarming rate, a disconcerting revelation for investors wary of backing an unprofitable enterprise. The year concluded with Rivian having produced 24,337 vehicles and holding $11.6 billion in cash and cash equivalents. A formidable foundation. Yet the challenges endured. In the corridors of uncertainty, Rivian laid bare its ambitions in the shareholder letter for Q4 2022. The goals for 2023 were ambitious: to produce 50,000 vehicles, weather an adjusted EBITDA loss of $4.3 billion, and incur capital expenditures (CapEx) of $2 billion, a significant leap from the $1.4 billion spent in 2021. The uptick in forecasted CapEx was primarily attributed to the expansion of production and the footprint of its manufacturing facilities. With a Q3 2023 shareholder letter, Rivian recalibrated its course. The updated full-year production guidance now stood at 54,000 vehicles, with an adjusted EBITDA loss reduced to $4 billion and CapEx scaled back to $1.1 billion, a testament to the company's ability to adapt and trim expenses in the face of high interest rates and a challenging sales environment. The narrative unfolding in 2023 showcased Rivian's commitment to setting realistic expectations and commendably surpassing them, a valuable quality for a fledgling public entity navigating the unpredictable waters of the stock market. What adds a layer of intrigue to this unfolding saga is Rivian's proclamation that it anticipates achieving positive gross profit in 2024. The promise of higher production, which slashes fixed costs per vehicle, curtails material expenses, and elevates the average selling price, paints a picture of a company on the cusp of a transformative chapter. As investors survey this landscape, the question of valuation becomes a pivotal plot point. Rivian's ability to increase production by approximately 50% annually through factory expansions fuels optimism. However, the full revelation of its 2024 expectations awaits the unveiling in late February, when Q4 and full year 2023 earnings are laid bare. For now, the numbers paint a compelling portrait. Rivian's price to sales P/S ratio stands at a modest 4.3. Seemingly a bargain for a company poised for sales growth exceeding 50%, coupled with the prospect of positive gross margins in the near future. Remarkably, this P/S ratio is only half that of its illustrious peer Tesla, which carries a P/S ratio of 8.7. While Rivian deserves a lower multiple than Tesla, given its status as an unprofitable and less proven entity, the extent of this discount appears substantial. This sentiment gains traction when considering Rivian's potential to outpace Tesla in sales growth. An additional nuance in this financial narrative is Rivian's financial position at the close of the quarter. With $7.9 billion in cash and $2.7 billion in long-term debt, the company finds itself in a slightly diminished cash position compared to previous years. However, in the grand scheme, it remains a formidable war chest, especially when juxtaposed with its $17 billion market capitalization. In this unfolding saga, Rivian emerges as a protagonist, navigating the twists and turns of a tumultuous market, each chapter revealing a company resilient in the face of adversity. As the story evolves, the climax awaits in the form of the Q4 and full year 2023 earnings report, promising a revelation of Rivian's true financial mettle and a potential turning point in its narrative. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about Rivian stock in detail now. On December 11, 2023, Rivian Automotive, RIVN, is priced at $19.02 per share, indicating a marginal uptick from the previous day's closing value of $18.62. The stock has been trading within the range of $18.62 to $19.55 recently. Encouraging the positive sentiment surrounding Rivian is an analyst upgrade from Stifel, who bestowed a buy rating and set a target price of $23, contributing to a boost in investor confidence. Despite Rivian's current lack of profitability, the company showcases robust fundamentals marked by impressive revenue growth, TTM $3.782 billion, and a substantial gross margin, TTM 64.09%. Suggesting a strong foundation for future profitability. Investor optimism is palpable, fueled by expectations tied to the ongoing electric vehicle revolution, reflected in Rivian's high beta of 2.31, underscoring its volatility compared to the broader market. However, challenges loom in the form of intensified competition within the burgeoning EV market, with established giants like Tesla and newcomers like Lucid Motors vying for market share. Rivian's journey to sustained profitability is another crucial hurdle, despite its admirable financial metrics. The stock's valuation remains lofty, characterized by a P/E ratio of N/A and a forward P/E of 4.05, implying that investors are already factoring in substantial anticipated growth. In conclusion, while Rivian currently rides a wave of positive momentum, anchored by analyst endorsements and robust fundamentals, the company must navigate the competitive EV landscape and chart a clear course to profitability to validate its valuation. Investors are advised to closely track Rivian's performance and stay attuned to emerging developments for well-informed decision-making. Rivian's outlook for 2024 sets a clear trajectory for its stock performance. Meeting expectations could propel it upward, while falling short may lead to a decline, at least in the short term. The transparency of Rivian's defined targets distinguishes it from the ambiguity often present in the investment landscape, providing investors with a straightforward framework for evaluating its performance in 2024. Notably, the market appears to have adjusted its valuation of Rivian, moving away from a meme stock perception to a more grounded assessment. The significance lies in wanting a stock to ascend based on merit rather than hype. Should Rivian achieve sales growth without a corresponding stock price rise, it could enhance its value by compressing the P/S ratio and making profitability more achievable by curbing cash burn. The psychological aspect of investing is not lost on Rivian, and long-term investors trusting in its 3 to 5 year plan can closely monitor key metrics. Those awaiting more evidence have a concise checklist to guide their observations. Despite the challenges faced by automakers in 2023, Rivian's commendable results underscore its resilience and competitive edge in the electric vehicle market. The stock presents an opportunity for high-risk tolerance investors, while those with a more conservative approach might consider waiting for additional quarters or even a full year to assess Rivian's sustained progress. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we'll see you in the next video.